Hello everyone. Today we are going to discuss how to prepare balance sheet. Already in the previous classes we solved so many problems. So see here the remaining problems. A sheet of balances of a ledger account which are open ever after the preparation of income and expenditure account. So already we know that in trading organization we prepare various accounts. First one is receipts and payments account. Second one is income and expenditure account. Third one is the balance sheet. Receipts and expenditure account follows the real account rule, that is debit what comes in and credit what goes out. Okay, whatever the cash is getting inside the organization is called as a receipt. Whatever the payments done by the organization, it's called the payments. Okay, so it is called as a receipts and payments account. It follows the real account, that is debit what comes in and credit what goes. First of all, we have to prepare the receipts and payments account. Later on, prepare income and expenditure, and later on, balance sheet. The balance sheet is third one. First one is receipts and payments account. The second one is income and expenditure accounts. So, in the case of non-trading concerns, the excess of total assets over outside liabilities is known as capital fund. Excess of total assets, whatever the assets, excess means assets are greater than liabilities, it is called as a capital fund. For finding out the capital fund, we consider only the opening balances of that items, assets, not closing balance. Okay, only opening balance. Made up of surplus of income or expenditure and certain items which are capitalized. Whatever the capital items are there, that should be posted in balance sheet. Excess of income or expenditure is added to the opening capital in balance sheet, as already we know, and already in previous classes we solved so many problems regarding finding out the capital fund. And the excess of expenditure over income is deducted from the capital fund. Here, whatever the surplus or deficit came in the income and expenditure, it should be adjusted to capital fund in balance sheet. Instead of word using profit, we are using here surplus. Surplus means excess of income. Excess means more than, greater than, higher than. Excess of income over expenditure. Then it is called as a surplus. It should be added to the capital fund. In case of loss, means excess of expenditure over income, it should be treated as deficit. It should be deducted from the capital fund. Okay? It is only a financial statement. Balance sheet is a financial statement and not an account. It is not an account, just is a financial statement. It has no debit and credit or credit side. The heading of the two sides are assets and liabilities. Heading is balance sheet. Two sides, assets and liabilities. The right hand side of a balance sheet is called asset side. The left hand side is called liability side. Okay, this is not an account, this is a financial statement. So we do not use the word credit side and debit side. We use the word debit and credit in case of accounts only. But balance sheet is not an account, it is a financial statement. We use the word only whether it is asset side or liability. The first column is left hand side is liability side and right hand side is asset side. Okay. The same rule is followed in trading organization also. The assets and liabilities can be shown either in the order of liquidity, in the order of permanency. See here, receipts and payments account for the year ended 31st December 2002. So, we know that receipts and payments account should always commenced with or started with opening balances of cash and bank. 1195 to balance brought down 20,500. 31/12/95 subscriptions. 96 1600. 95 42,200. 94 800. So total 44,600. Okay. Sport meet profit 31,000. Dividends on investments 20,000. By salaries 41,800. By stationery 8,000. By rates 12,000. By telephone 2,000. By investments on 25,000 4% stock at par, sundry expenses, balance carried down. So 25,000, 18,500, 9,000 like that. So here additional information is given. There are 450 members, each paying annual subscription of rupees 100, rupees 900, being in area arrears 94 at the beginning of 95. Okay. Stock of stationery on 31st December 94 was rupees 4,000. At 31st December 95, rupees 1,800. At 31st December 95, the rates were prepaid to the following 31st March, the yearly charges being rupees 12,000. A quarter's charge of telephone is outstanding. The amount accrued being rupees 700. Expenses accruing 31st December 94, rupees 1,400. So these are the adjustments. So additional information is there. Consider all these. So on 31st December 99, the building stood on the books 2 lakhs. It is required to write off depreciation 5% per annum. Investments at 31st December 94 were rupees 4 lakh. You are required to prepare income and expenditure and balance sheet. Okay. So see here, preparing receipts and payments account. It is an income and expenditure account. To salary, as it is a revenue item, it should be posted here 41,600. Only revenue item should be posted in income and expenditure account. To stationery 8,000. Add opening stock 4,000. Total 12,000. Closing stock 1,800. Remaining 10,200. The rates 12,000 less prepaid 3,000. 9,000. Net value is 9,000. So telephone is a revenue item posted here 2,000. Outstanding 700. Total 2,000. Next, sundry expenses 18,500. Outstanding expenses 1,400 to be deducted. Net is 17,100. To depreciation on building 10,000. So these are all the revenue items. For that we have posted here. We know that only revenue items should be posted here. Okay. By subscriptions 45,000. By sports marking profit 21,000. By dividend on investment. These are the revenue incomes we posted here. Next, balance sheets here 31/12/2002. So capital fund 6,24,000. So how we get? So see here below. We take only the opening balances in this balance sheet. Why? Because when we are finding out the capital fund, we take only the opening balances of assets and liabilities. Then only we get the capital fund. The capital fund should be, after that, the capital fund should be posted in closing balance sheet. So building value, opening balance 2 lakhs, investments 4 lakhs, subscription outstanding 900, stationery 4,000, cash 20,500. Left side express outstanding 1,400. Remaining 6,24,000 is the capital fund which is posted in the closing balance sheet. So see here, already we posted that capital fund 6,24,000. If we get surplus from income and expenditure, that should be added to capital fund. If we get deficit from income and expenditure, that should be deducted from capital fund. Okay, 6,24,000 minus plus 5,400. Why? Because we are adding excess of income, means income is more than expenditure. It should be a profit. But instead of profit, here we are using the word surplus. So we have to add 5,400 to the 6,24,000. So the net value is 6,29,400. Next, outstanding telephone, it's a liability. So posted here 700. Subscription is in advance 1,600. So building 2 lakhs minus depreciation 10,000, 190. Okay. Investments and add during the year 25,000. So total is 4,25,000. So subscription outstanding for the year 9400, 95, 2,800. It is 2,900. Stationery 1,800. Prepaid rates 3,000. Cash 9,000. 6 lakhs 31,700 is the answer. Balance sheet should be tally. See here, subscriptions account is the first one. Balance is 900 to income and expenditure transfer 45,000. Balance received in advance 1800, 47,500. Cash subscription received during the year 44,600. Balance carried on due 9400, 95 2,800, total 2,900. So 1600 is the net value. Okay. So illustration 2 here, receipts and payments of Gurajada Cultural Society for the year ended 31st December 99. January 1st, see here, to cash in hand 1500, subscription 98, 99, 2000, 200, 16,200, 250. Total is 16,650. Entertainment proceeds 2000. Entrance fee 670. Interest on securities 480. Sale of old chairs 120. Book value is nil. Okay. Bank overdraft 3100. By investments in securities 3000. By furniture 1450. By salary 6200. By printing and stationery 890. By entertainment expenses 1710. By sundry expenses 1420. By balance on cash and bank 550, 3100. The total is 21,420. This is the receipts and payments account. Okay, for this we have an additional information is there. So entrance fee ought to be capitalized. Okay. So here hint is given, entrance fee should be capitalized, then only we have to capitalize, otherwise entrance fee should be posted in income and expenditure account. The salary of 550 for December 99 is outstanding, expense accrued on 31st December 98 was 132. Society has, so these type of adjustments should be performed in income and expenditure account. Okay, on 31st December 98, premises stood in the books at rupees 24,500, investments 6,500, depreciate fixed assets by 5%. Okay, like that. Salaries, so next illustration, salaries, printing and stationery, okay, stock, entertainment expenses, sundry expenses, telephone. So these are all the items till now we have seen. Okay. So see here, the balance sheet is prepared. Subscription received in advance 250. Okay. So outstanding salaries, capital fund, cash in hand, cash at bank, stock of stationery. So these are all the items which will be posted here. Okay. One assignment is also there. Please go through this assignment and solve the more problems. Okay. So, like this, we have to prepare income and expenditure account. First of all, we have to prepare receipts and payments account, income and expenditure account, and later on the balance sheet. Balance sheet is not an account, it is a financial statement. It has 4 columns. The first one is liability column, second one is amount column which is related to liabilities, third one is assets, and fourth one is amount which is related to assets column. So by preparing the balance sheet, we may know the position, financial position of our organization. Okay. So with this we are completed non-trading organization. If you are perfect in preparing in profit and loss account, trading account, balance sheet, then it is very easy to solve this receipts and payments account, income and expenditure account, balance sheet. Okay. So go through these slides. You can solve the more and more problems. Okay, thank you.